Firstly, a huge thank you to Dan and the members of London Venture Capital Network. It's always a pleasure to be here, to be having conversations with people that do have deep love for Africa. Always a great thing to see friendly faces and people that we're familiar with. Now, as we know, Africa does not have an innovation problem. Innovation is far from a problem. We've got a number of creative minds, a number of innovative souls that are building fantastic organizations in very, very difficult circumstances. What we have is an access to liquidity problem. A problem that has been a dear cause of our underdevelopment for so long. How are we seen? How is Africa being presented? How are our best companies being presented to the world? The reality is exit paths are very limited. The amount of exits that we have seen on the African continent generally has been very little. IPOs, I think last year we saw 2 in Optasia and Cash Plus. The amount of capital that has come in through early stage investing has been phenomenal, but it's not sustainable if we don't have companies listing. Now what this means is access to a different type of capital. Venture capital enables you to build companies really fast, break rules, and grow these companies. To get access to the next stage of capital, the more patient capital, the pension fund capital, institutional funds capital, a different behavior is required. Now this behavior can be learned, which is what we're saying. It's the same sort of thinking behind the behavior of early stage founders. They learned the language of capital. They learned the language of pitch decks. They learned to speak the language of capital to people in Shoreditch and in Silicon Valley. And as a result, we started this fantastic run that has built us to today, where companies, young individuals on the African continent are raising phenomenal amounts of capital from their foreign counterparts. And that enabled us all build this fantastic ecosystem. Now, for this to continue, we do need to see exits, whether they're through mergers and acquisitions, whether they're through listings, but we need to see exits, or else it's not sustainable. Freda said some really exciting things. She mentioned that they do a number of investments in companies on the AIM market, 10 million capital base. Now, the problem, as we said, is not innovation, because we've got innovation. There is a lot of capital out there, as we just found in Nigeria recently. Although there's no capital, we saw a number of banks raise $500 million and have become much bigger. What we think the problem is infrastructure, access to capital. How do we get you to understand my story? Price me properly. How do you see things from my point of view, not from the point of view of Silicon Valley or Shoreditch? How do we present the African ecosystem in a way that global investors, and when I say global investors, in this case, we're talking about the next stage of investors after venture capital, how do they recognize it, price it, understand it, and ensure capital continues to flow to the African ecosystem? On the 28th of January this year, we launched the 80/50 index at the London Stock Exchange. It's the first private market benchmark of its type on the world, period. And the reasoning for it is to present African technology companies to later stage capital, the deal makers, the people that write the big, longer checks with smaller interest rates, but long-term capital. So far, it has been a phenomenal success. 13 stock exchanges, 14 DFIs have partnered. The amount of institutional companies that are looking to present funds, 250 million pilot funds to invest strictly in secondaries on the 80/50 index. Now, the 80/50 index is a private benchmark for Africa's most ready listed technology companies. Now, these companies, the things that we do use to pick these companies, the benchmark in itself it has been built by ISCO standards, which is the International Organizations of Securities Committees, meaning it's a world-class index. It's got 50 of arguably the most sophisticated technology companies being built on the continent. What's important with the index is that it enables a certain level of visibility for the companies, transparency, and a fantastic pipeline for institutional capital. It gives institutional capital a good overview of governance, maturity of these companies, their valuation momentum, their ambitions with where they want to grow into, and it enables our private companies to present themselves to institutional capital in a way that institutional capital is used to seeing. So if we think of the Bloomberg terminals of this world, or the stairs of this world, what they do is they present companies in a way that institutional money understands. And that's exactly what the 80/50 index has done. Now, it's the first of a number of indexes. Indexa itself, we are a benchmark company for emerging markets. So there's an 80/50 and 80/100, an AE 2000, which is an African enterprise index, very similar to the Russell 3000, benchmarking small to medium enterprises. And the whole reasoning, the whole thinking behind benchmarking our companies is to ensure that we get the right price for them, the right sort of visibility for them. And what this does is it attracts capital into the continent. Now, to go into a lot more detail on this, I'm going to invite the very fantastic Tolulope Omoleye-Osindero for a side-side chat. Tolu.